So a hard money loan is really just a bridge loan. It's really just a bridge loan from a private lender, an unregulated lender. So what are the benefits of hard money loan? Why do investors, first-time flippers all the way to investors with thousands of units? So I've closed over $1 billion in hard money loans, and I can assure you one thing, not every project qualifies for hard money. Have you ever wondered why real estate investors choose to go to a hard money loan program versus a traditional bank loan program? I mean, why would any investor choose to pay 10, 11, 12? And I mean, I've seen rates much higher. Why would anybody choose to pay higher rates through a hard money loan program versus 7% with a bank? My name is Mike Chadwick, and I've been in the hard money space for over a decade. In this video, I'm going to explain exactly why they choose to come to me and pay higher rates versus going to a bank. So this is one of my favorite topics in comparing traditional bank financing versus hard money and the experience of closing a loan with a hard money lender. And, we can get into all the different facets of what it takes to get a loan closed with a bank. And I won't bore you with that, but we're going to talk about today what I think are the three main categories that I like to focus on when it comes to comparing the two experiences. We know banks can get you lower rates. That's not the point. The point is to understand why people choose to go hard money and pay higher rates. And in this video, we're going to talk about the speed and flexibility of hard money lending. We're going to talk about how we look at the asset, how we get excited about the strategy. Is it a BRRRR strategy? Is it a fix and flip? We're going to look at the asset. We're going to look at your experience and does it make sense and does it value out? We're not going to go through a deep dive into your personal financial condition. And then finally, the third thing that I like to focus on that I don't think a lot of people do focus on is that you get to isolate your personal financial obligations and credit using hard money to your advantage. And by that, I mean, we're lending to an LLC, not to you personally. So we allow you to isolate your investments in ways that I think a bank can make it more complicated to do that. So we'll get into all three in this video, but that's a quick summary as to what this video is going to be about and how I'm going to go about explaining the differences between a traditional bank loan experience versus, a hard money loan experience. So the name of the game, it's speed. We're in the speed of money business. We move quickly. Loans are approved in a day. We're getting deals closed on average in, say, 10 days, I would say 2 weeks. And I've closed loans as quick as 3 days. We can do deals fast. We understand that we're responsible for facilitating transactions. I mean, in the market I do a lot of my business in, which is the New England market, it's very difficult to find good investments. A seller wants to see that you're either a cash buyer or you're the next best thing, which is backed by a hard money lender. And when you partner with a group like ABL, as an example, you're going to be able to bid on properties with confidence, number one, but number two, you're going to be able to move at the speed that the market expects. And that's more important than anything else because you can't measure opportunity costs. So when we talk about, rates of 10, 11, 12%, I know folks who would take 18, 20% to get into the right transaction because the profit justifies it. So at the end of the day, the name of the game in the hard money space is speed. We're in the speed of money business. You come to me, you're going to get a quick response and we're going to help facilitate transactions other financing sources can't, and certainly not a bank. Because when you look at the experience with a bank, it might be 30 to 45 days before you can get approved to borrow from the bank, never mind be in a position to close within that period. I mean, it's just a completely different experience, and we'll get into a little bit more next when we talk about what I like to refer to as a bank's financial proctology exam. So the next big consideration for why borrowers come to us, hard money lenders like myself, versus going to a traditional bank is because with banks, they have to deal with what I love to describe as a financial proctology exam. It's this never-ending list of documents that are required. And it's when a document comes in and it gets reviewed, and then you need another document, right? So let's talk about it. Tax returns, banks, they need them. We don't, right? We don't need pay stubs. We don't need to verify your employment. We don't need to worry about what your debt to income ratio is. And I can go on and on and on and on, right? So what does a hard money lender like myself, what do we require? We require a minimum credit score, right? So we want to make sure that if you're inexperienced, you have a higher credit score than if you're very experienced. So the minimum credit for a first-time flipper might be 700. A minimum credit score for for an experienced flipper might be 660. And if you have great experience and you had your credit score drop in the last few months to 625, we're probably still going to do that deal too. Obviously a bank doesn't have that flexibility, right? Bank just kills the deal right then and there because they can't have common sense underwriting, right? The next thing we're going to look at is liquidity. Do you have enough cash in the bank to close on the deal, meaning your down payment? And do you have working capital to be able to fund construction materials and get reimbursed for it, which is a whole nother video. And then, do you have the working capital to be able to fund loan payments? Those two things, credit and liquidity, are going to be what hard money lenders focus on aside from experience, right? And experience is the big one. Experience verification means everything. We're going to look specifically at the number of deals you've exited on title in the last 3 years. And we're going to take experience into consideration when it comes to your liquidity and it comes to credit. So, if your credit drops and you have great experience, then we're going to reward that and we're going to make the exception, right? And we're going to go so far as to reward your experience and give you lower rates, higher leverage as you get more and more experience. So there's a lot to it, but the bottom line is, we're going to be focused on the asset, right? We're going to focus on the asset, what it is the asset is worth, what it's going to be worth. Can you execute that strategy? And that's the reason why the company I work for is named Asset-Based Lending. They're also the sponsor in the video, but that's the reality of how we approach these projects as a hard money lender. What is the asset? What is it worth? What's the strategy? And what's it going to be worth when the strategy is executed? If the borrower can execute the strategy, then we can keep focus on the asset and the asset's ability to repay our debt in the end. We'll fall back on credit and liquidity when it comes to borrower's ability to refinance us out. But as long as the borrower's experience suggests they can execute the strategy, we're going to be focused on that asset. We're going to focus on the value as the major source of repayment of our loans. So one of the other important factors to know when considering traditional bank financing versus hard money is that hard money lenders don't report to credit agencies. Our borrowers are going to be an LLC formed by you and owned by you, and you'll be the guarantor of the loan. So sure, there's some financial obligation that you're going to have towards this, obviously. But the fact is we're not reporting to credit agencies. So your debt doesn't go reported. It doesn't get factored in to your debt to income calculations and other things that these banks are making you go through. It allows you to do what you've always intended to do, which is to isolate the liability. You're forming an LLC and you're taking the advice of your attorney to own your assets in an LLC. Hard money lenders encourage that. Our borrowers are the entities that you form to own these assets. If you don't have one, we're going to make you form one because we're not allowed to lend to anyone personally. We need to lend business to business, and that's ultimately why we don't need to report to credit agencies. So that allows my borrowers the ability to really do what they want to do, raise capital, invest in different assets, and form different partnerships, and do it without impacting their financial condition as it relates to, their family's obligations and their other personal matters. Hard money can be a great option, for business owners, for folks who want to keep their personal financial condition isolated from, their investments. Hard money lenders like myself facilitate transactions, and that's why borrowers keep coming back. That's why borrowers choose hard money versus traditional bank loans. It's the speed, it's the flexibility, no doubt about it. But it's the other factors like us not reporting to credit agencies that could play an important role in how you're scaling your investment portfolio, or how you manage your painting business or your plumbing business on the side. There are all different types of investors out there, but I can tell you one thing, they all just keep coming back to hard money. And I'm watching folks grow from 2, 3, 4 properties up to 30, 40, 50 properties. And it's really great to watch. And ultimately, I think when you go through a process with us, asset-based lending, or just any hard money lender in general, and then you go to a bank, you'll know immediately how they feel different. We want you to do these deals. We want to facilitate transactions. We're not treating you like a consumer lender would. We hope for you to be a repeat customer, to build your portfolio with us. And that's ultimately, I love doing what I do. So if you have any comments, questions, please don't be shy. If you want to reach out to me about a particular deal, please DM me. But as always, please don't hesitate to like, comment, subscribe. Thank you to Asset-Based Lending for sponsoring the video as always. And I look forward to the next one.